And welcome back. So now let's take a look at a few more trap and squeeze patterns, and by then it should be very clear what this pattern is and how to get into such a pattern. So now we are here on the US dollar Canadian, again the 4-hour chart, and you can see we are coming from this downtrend. The question is, was there a reversal set up before that? Just look at this now and you can see what has happened here. But at that point we are only in a downtrend with one trend wave, and we always need two trend waves regardless of the setup that we are trading, whether it is the swing reversal, the squeeze, or the trend line reversal that we will get to know in the next video. So this was not a valid market at that time. Then we move lower, we make another trend wave. Here it was a little bit more tricky. If you got into the trade here, there was probably nothing wrong with it and you just have to book the loss. And you cannot get a win rate of 100%, and that is totally fine. We kept on moving lower here, very slow grind. And then here at the bottom we have this pin bar here that is going through the outer Bollinger Bands, and we are immediately reversing. So although I said that you can usually get in ahead of the 20 SMA on the squeeze pattern, entering here on just this bar would probably be a little bit too premature because we don't have a lot of context and confluence. You can see we had a similar price action before that, although we did not see the squeeze, but the safe entry would definitely be here after the break of the moving average, and once we confirm that we have a solid break and a solid upside momentum. So this was then the entry, and you can see, even though if you would have taken the loss here previously, then you could have made more than up for this loss here with the next trade. Let's take a look if we get a confluence factor for support and resistance area in this area. Let's zoom out a little bit and you can see here was the reversal. When we just put this area or mark this area here, then we don't have a real level, we have a little bit of a confluence, so we are lacking this support and resistance here a little bit. Let's see if we can get a Fibonacci in this case. So here's the origin, here's the B point, the C is very nicely at the 50, then we have the confluence here at the 161 is right here where we then find support, so that is a good additional confluence factor. We also have something like a divergence, although because we are lacking a little bit the swings, it is not as clear. So let us mark that, and we are making lower lows here on the price action. And when we look at the RSI, we are making higher lows. So that is another confluence factor that we have, and especially this swing and squeeze, that is the main confluence factor and the main signal that we need for this trap pattern. So although we are lacking a little bit the support and resistance component, we still have a very good overall trend with good confluence factors. Then we have a different type of squeeze and squeeze pattern here with a very short-term uptrend. You can see here, depending on how you want to call it, we have multiple trend waves with very short consolidations and pullbacks in between. So we don't have this large trend that we look for, but if you see at the overall context, it looks quite interesting. So you can see here this pattern is spiking outside the Bollinger Band, but at the same time it is closing outside the Bollinger Band at the absolute high of this candle. Then the next one is an even more interesting spike. We go higher, we immediately reverse, and this is also an engulfing bar where this second red bar completely engulfs the previous green bar, so that is a good confluence factor and a good trade entry signal. If we look here a little bit to the left, we can see that this is a supply area here, the origin of this huge drop after this little range here, this little consolidation. So we have this as well. Because of the structure here, we don't have a Fibonacci, but at this point we have more than enough information to get into the trade. We can get in pretty early here. You can see the following reversal was not as strong, but there is no way of knowing that before that. And even here at the bottom you get another squeeze, which could have been the trade exit signal for you on that one. Let's take a look at another market. So we are here on this uptrend, and then you can see we have multiple trend waves, 1, 2, 3, and then we move into this top. Then this squeeze sticks out very well, it stands out a lot. We break beyond the outer Bollinger Band, we reverse, we close back inside the Bollinger Band. Here you can see we are still having a green candle, so it is not optimal and it's not the best signal to enter just here at the close of this candle. But then you can see, even though we wait one candle, we get a lot of additional confluence, and you can see this red bar is now showing that we are seeing the reversal, and that would then be the best entry signal for such a trade here. Let's zoom out a little bit and we can see maybe that here we have this previous resistance. So you can see here, very interesting, we found resistance again already here at this point. We did not sell off, and then we spiked higher, we made the squeeze and then reversed. So that is why it is called a squeeze or a trap pattern, because many traders were already looking at a short opportunity here, but we were waiting for this final and also for this final piece. And also before that we did not have a very strong reversal and a strong signal, so there was no trade before that. And we can probably also draw a Fibonacci here. We have A to B, then the C retracement goes into the 61.8. The reversal or the extension here ends at 200, so that is a very interesting confluence factor, and it is adding to this pattern. If we take a look at the RSI, we can see that here's also a RSI divergence. We are making lower highs here. Here was the previous swing high. Prices are making higher highs. The RSI is making lower highs. So we have this signal as well. And you can see that all the things line up. We have a pretty good sell-off afterwards. So even if you got in here previously on the resistance, on this little premature break, then you could have made more than up for the previous loss. And so you can see you don't need a 100% win rate. If you stick to the rules, you will get good sized winning trades, and they will usually be enough to offset your losers if you stick to the plan. Let's look at one more example, and you can see we were here in a range, then we were moving lower, multiple trend waves, 1, 2, 3, and then the fourth one. Then at the bottom we have this spike here. We don't have an immediate reversal. You can see price rallies higher here into the moving average. So without the benefit of hindsight, this was probably here the entry signal. You had to sit through a little drawdown, and price then eventually broke the 20 SMA here and rallied. So let's see if we have other signals, and you can see that already. You probably have seen it. Here is a demand area, very strong demand area, small consolidation. We shoot up here very explosively. So you can see that we have this confluence factor as well on our trade. Then we probably don't have a good, we probably don't have a Fibonacci here because the trend structure does not show good swings. We can take a look at the RSI again, and we have no divergence in that case. We have a convergence here once we look at what happens after the spike. So you can see both price and the RSI are making higher highs. So that is confirming that we are seeing something and seeing a change. And then you would have more than enough entry criteria to get into such a trade with a very interesting squeeze pattern. And those are a few examples now in those two videos that explain the trap pattern. If you have any questions, just move over to our forum, post your screenshots, post your questions, and interact with us, get feedback from us and other members.